Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets of the stock market by looking at the real documents companies have to file with the government. Today we are diving into a really interesting one from FutureCrest's Accession Corp. It looks like this company is getting ready for its big public debut, and we're going to see all the juicy details behind the scenes. Before we jump in, if you like getting clear, straightforward analysis of these filings, make sure you hit that subscribe button and ring the bell. And hey, we've got a super active Discord community where we break down these reports even further. Find the link in the description below. So this filing is a Form 8K. Think of it as a current report that a company files when something big happens that shareholders need to know about right away. For FutureCrest Accession Corp, or FCRS as they reknown by their stock ticker, the big event is their initial public offering, or IPO. They are essentially selling shares to the public for the very first time. The earliest date mentioned here is the 25th of September 2025, and this sets the stage for the events that follow. The company is based in the Cayman Islands and is structured as a Special Purpose Acquisition Company, or SPAC. You might have heard of SPACs before. They are essentially shell companies created with the sole purpose of raising capital through an IPO to acquire an existing company. Now let us look at what kind of shares FCRS is offering. They have units which are like a package deal. Each unit comes with one Class A ordinary share and a quarter of a redeemable warrant. They also have separate Class A ordinary shares and redeemable warrants. The warrants give the holder the right to buy a Class A ordinary share at a specific price, in this case $11.5 per S-share. This is pretty standard for a SPAC. This section is all about the agreements they've entered into related to this IPO. The big news here is that on the 25th of September 2025, the registration statement for their IPO was declared effective by the US Securities and Exchange Commission. Or SEC, this is a major green light. Then on the 29th of September 2025, it all happened. FCRS closed their IPO selling a massive 28,750,000 units. They even exercised the underwriter's option to sell an additional 375,000 units. The price per unit was $10, raking in a cool $287,500,000 in gross proceeds. This is a significant amount of money being raised. They also signed an underwriting agreement with Cantor Fitzgerald Foodie Co., who acted as the representative of the underwriters. This agreement lays out the terms of how the shares will be sold to the public by the investment banks. Other key agreements include a warrant agreement and an investment management trust agreement. The trust agreement is particularly important for SPACs because it outlines how the IPO funds are held in trust until a business combination is found. There is also a registration rights agreement, which basically means that certain security holders have the right to have their shares registered for public sale in the future. And then we get to the private placements. They entered into a sponsor private placement warrants purchase agreement and a representative private placement warrants purchase agreement. These agreements deal with warrants purchased by the company's sponsor and the underwriters, typically at a lower price than what the public pays for the units. This section details the private sale of an additional 3,500,000 warrants. These are the private placement warrants, and they were sold to the sponsor and the representative. Each of these warrants can be exercised to buy one Class A ordinary share for $11.5. The price for these private warrants was $2 each, bringing in another $7 million. The sponsor bought 20,25,000 of these, and the representative bought 125,000. This is all done under an exemption from registration because these are private sales. Now onto the leadership. On the 26th of September 2025, in connection with the IPO, new directors were appointed to the board. Eric Semler, Seth Ginn, Sam Engelbart, and David E. Sharbert were appointed. These individuals are independent directors, and they've also been assigned to various board committees like the Audit Committee, Compensation Committee, and Corporate Governance and Nominating Committee. This is a typical step to ensure good governance. Also, on the 25th of September 2025, the directors and the company S officers entered into a letter agreement and an indemnity agreement. The letter agreement likely outlines their duties and commitments, while the indemnity agreement protects them from personal liability for certain company actions. This part talks about changes to the company S foundational documents. On the 25th of September 2025, FCRS filed its amended and restated memorandum and articles of association with the Cayman Islands Registrar of Companies. These are essentially the company's bylaws and constitution, updated to reflect the new structure and requirements following the IPO. Here is where we get a bit more detail on what happens with all that IPO cash. A total of $287,500,000 from the IPO proceeds, including a deferred discount for the underwriters, and the sale warrants was placed into a US-based trust account. This money is held by Continental Stock Transfer and Trust Company acting as the trustee. This money will only be released to the company once they complete their initial business combination, which is their goal as a SPAC. If they don't find a company to acquire within 24 months, they have to redeem the public shares. They also filed 2 press releases, one announcing the pricing of the IPO on the 26th of September, and another announcing the closing of the IPO on the 29th of September. These are standard announcements to the public. This final section lists all the exhibits filed with this report. We've got the underwriting agreement, the warrant agreement, the trust agreement, registration rights agreement, private placement warrant agreements, and so on. Think of these as the detailed legal contracts backing up everything that has happened. So what is the big picture here? FutureCrest Acquisition Corp has successfully completed its IPO, raising a substantial amount of capital. They reset up their corporate structure, appointed leadership, and secured the funds in a trust account for their future acquisition. As a SPAC, their primary mission now is to find a target company to merge with. The success of this investment will hinge entirely on the quality of that target company and the terms of the merger. The $11.5 exercise price on the warrants suggests they are looking for a target company that they believe will significantly grow in value beyond that level. The key takeaway is that this is just the beginning of their journey as a publicly traded entity, and the real test will be their ability to execute their acquisition strategy. Alright, that is our breakdown of FutureCrest Acquisition Corp's IPO filing. What is your take on this SPAC launch, and what kind of company do you think they'll acquire? Let us know your thoughts in the comments below. If you found this analysis helpful, please give us a thumbs up and subscribe for more deep dives into corporate filings. And don't forget to join our Discord community for even more insights and discussions linked in the description. Thanks for watching, and we'll see you in the next video.